Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here since 2003 for individual traders and professional institutions, which I consult with. And let's go ahead and get started, guys. Been a lot going on with the market. So this is our back end system that we record for our standard web page newsletters. I'm going to go ahead and start this audio. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, March 22nd newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. Going to keep it pretty simple tonight, given the volatility and given the FOMC today. I didn't add any new trade ideas. Again, don't want to force trade ideas in this type of volatile market. Again, guys, as you know, we had the FOMC today, and as expected, we got that quarter point rate hike. Again, that was expected, and the market experienced the usual high volatility following that rate hike, both up and down moves, really a big chop fest. And it was holding up okay until some comments, while Powell was speaking, some comments from Janet Yellen during the press release that the Treasury is not considering working on unilateral expansion of deposit insurance. And market didn't like that. It sold off hard the last half an hour into the close. All right, so technically the S&P rallied up today to a supply zone that we've been showing. A resistance level got a little bit over that. Basically was a head fake bear trap. It got over that trend line and the 50-day moving average and then reversed back down to close below the 50-day moving average, the downtrend line, and right at the 200-day moving average. Okay. As you know, there's been recent breadth issues with the market. For example, the NASDAQ, which we've talked about. I got a little typo here. The NASDAQ summation. It has not even tried to bounce while the NASDAQ has rallied back to the highs. And just to give you an example of the breadth, so Apple and Microsoft alone now make up more than 13% of the S&P 500. That's not healthy. We've seen that in the past. Basically, what it tells you is it's a handful of stocks that are leading the indexes while a lot of the individual smaller stocks languish. Okay, let's go and get started. So the first thing we're going to talk about is our systems. So at Breakpoint Trades, we have a variety of systems here besides our general market analysis, technical analysis, and trade ideas. So we have 2 types of systems. We have reversion to mean systems. We have 21 of them, which I send out trade notifications for on the SPY ETF and ES futures. Eventually, I'm going to be adding other ETFs, creating an ETF basket. All right. But they're reversion to mean systems. They're not trend following. They look for extreme points in the market. They take a trade. They get a reversion to mean price movement back to the mean. Then they get out. Okay. Then we have the trend following systems like our 401k KISS type systems. Complete opposite. And anyway, on Monday, one of our reversion to mean systems triggered a short, specifically called the high, mid, low short. I actually have 2 versions of that system. This was version 2. It has the lower overall stats, but it did a lot more trades. So I sent out this officially to the website as a trade, and the market rallied the next day. It didn't take a second entry. Wish it had. That would have been a great entry, but then of course today market sold off hard and the system closed out. Again, it wasn't a big winning trade, but it did get a winning trade. Again, you can see how the system trades, reversion to mean. It catches little trades, gets in, gets out, gets after it gets the reversion to mean. So it was a winning trade. Congrats if you took it. Next. Image number 3. This shows you the profit curve to the system. So overall, decent profit curve on this system. And this is one of the lower profit factor systems that we have. The profit factor in this system is around a 7. Most of our systems are anywhere from 15 to 20. Some of them are 100 or higher. So this is one of the lower ones, but still has a great profit curve. I think this one has around 80% winning trades, which again is on the low side for our reversion to mean systems. Most of them have, upwards of 90% or higher winning trades. But again, Another little winning trade in the bag. Next. Moving back to the general market. So item number 4, this shows the index sector table. So what transpired on the market today and for the week. So you can see the major indexes, solid losses here across the board, down around 1.7% for most of the indexes, with the Russell small cap leading, down 2.8%. The indexes are still up for the week for now. They're up about 0.5% or so. Russell up about 0.25%. We'll see the reaction of the market tomorrow. Today we had a big sell-off with the S&P 500 losing 65 points. And sometimes you get an opposite reaction after the Fed day. So we have to see how the market reacts tomorrow after it digests some of this news. It's possible it could reverse some of this, or it could just continue selling off and we could lose the week gains. So we'll see. Broad-based sell-off today. All 21 sectors were down, as you can see. For the week, most of the sectors are still up slightly. Currencies, US dollar had a big sell-off today, down 0.75%. Not surprising. And down 1.35% for the week. That's a big move. Crypto were down today. Commodities, mostly to the upside. Natural gas continues to get hit, but crude oil was up. And get a little mixture here. Copper was up. Some weakness in the ags. Precious metals were obviously up with that big sell-off in the dollar. And precious metals have really benefited lately, especially with the fear in the banking system, and of course lately with the dollar pulling back. Today, big move in bonds. TLT up 1.3%. 10-year down about 3%. Next. Item number 5 shows the economic news calendar. Again, we had the FOMC decision today. They raised rates by 0.25 point, which was widely expected. They are expected to raise at least again. Obviously, it's going to be dictated on future data. And, a lot of news. And tomorrow we have initial jobless claims, natural gas inventories. Let's go ahead and move on to the index charts, folks. So, first image below, item number 6 is a daily snapshot of the 5 key major indexes. So the Dow is at the top. Again, you can see the Dow last year outperformed the other indexes as money rotated out of tech and into the, more stable companies with lower PE ratios. And Dow's been languishing a little bit this year. You can see it lost that horizontal support a couple weeks ago, rallied up to it, back tested it as resistance. And here's the S&P. The S&P's quite a bit stronger. Big reversal though there today. And NASDAQ area, that's been with the strongest area lately. It was outside its upper Bollinger Bands yesterday and today at one point, but nice reversal. And the Russell at the bottom here really looks like death. You got a little shelf support. If that gives way, that could have a big move down. Next. Chart number 7, moving to the S&P 500, our proxy. So here's the daily zoomed in view of the S&P 500. So as you know, we had a market topped out in early February, which we were expecting. Remember, seasonality wise, we were showing the seasonality charts. Markets usually very weak in February, and that played out. So markets sold off pretty much all February. We had a little bounce, formed a lower high in early March. Perfect little short opportunity off that doji. You also had a MACD KISS stochastic overbought setup there. And price sold down into this demand zone, which we identified as a support, where we found support, if anyone went long there. We rallied up. We got up to the 50-day moving average yesterday, resistance. Today we were up. We were over the downtrend line here, this expanding wedge and the 50-day moving average, but it was a head fake, a little bear trap, and we reversed sharply, closing back down, really closing right at the 200-day moving average. So again, like I said, tomorrow's important. Are we going to lose the 200-day moving average, or try to bounce here? Again, guys, the one slight hope here is that sometimes markets have the opposite reaction after the FOMC, after people digest it a little bit. So we'll see what it looks like tomorrow, but it's going to be interesting to see how the market reacts tomorrow. Next. Chart number 8, here's another daily view. We've been showing this large coil, and we bounced off that lower trend line. We're kind of in the middle we got in the middle of the coil range, big pullback here. Next. Chart number 9, here's the daily KISS trend system. So this is one of our trending systems, not reversion to mean, but trending systems. This generally is designed to stay long in bull markets. We're not in the bull market, so typically in bear markets like we're in, when it gets long, maybe it's only long for a month or two and gets out. It's still flat at the moment, and actually you can see today price rallied right up to that ATR, found perfect resistance there. Moving average, the BPTMA was pinching on the other side of the ribbon. So logical area for the market to find resistance, that ATR. You could see the previous lower high. Next. Chart number 10, here's the 4 time frames we like to look at. So first off, here's the daily on the upper left. The half day, we had the market found support at that support cycle with the DeMark 9. We have the ATR resistance overhead, as you can see. Next, image number 10. This shows you the time frames, 4 time frames for the S&P. So first off, you can see the daily. We stopped right at that ATR, logical area to stop at. On the half day, we broke the ATR, but notice the cycle resistance here. Logical pullback from there. Remember, we rallied off that cycle support on that low in the DeMark 9. So now we'll see if we can form a lower high in here. I'll be analyzing that below. The other thing to watch is the 60 stochastic here. 50% area tends to be a dividing line between uptrends and downtrends. You can see we fell below 50% there in February. That lower high rally stalled right at the 50%, and you can see logically prices stalling here as well at the retest of the 50% area again. On the 78 minute, we had a DeMark 13 resistance cycle. You can see the big sell-off late in the day. Next. Chart number 11, here's a 2-hour chart of SPY ETF. And again, you can see this rising wedge we had drawn the last couple days. We needed another pop, and we got that other pop in it. It was a little 5th wave move, and you can see price got over this downtrend line, but it was a little head fake. You needed confirmation. Hopefully no one chased that break over that downtrend line because it needed to break that and hold. Instead, it broke and reversed hard. Okay. Now we'll see if we can form a higher low, which I'll talk about in a minute. Next. Chart number 12, here's a 60-minute view of the S&P cash. Again, the same view. The issue we're having with the stock charts is they're missing a little data here from that Monday. They had a data provider issue and they never filled it in. But anyway, you can see the same pattern otherwise. Next. Chart number 13, here's a 60-minute view of the SPY ETF. Again, you can see we got up through that resistance zone briefly, then reversed. All right, rising wedge, 5-wave pattern, 1, 2, 3, 4, 5, perfect wedge. Now, you can see there's a down uptrend line here to monitor. Should we get some weakness, watch that. I also added fibs here from the recent lows on March 13th to the recent highs today. So, not quite to the 50% fib area. The 61.8 is down here. Price could get down to there and still form a higher low. Now, if price were to get below that 61 fib, then I would start to get concerned. Now, the fact that price has had the largest rally from the March low to the recent highs, this is much larger than the rally in early March. So we do have a symmetry break. So there is some odds at a higher low here, despite the ugly candle. So we'll see. Finally, chart number 14, here's a 1-minute chart of the S&P, just showing you today's action. It was pretty much ho-hum, nothing going on before the Fed. It was a great day to go out and do something else, get errands done. And then, of course, right on the FOMC, boom, look at all this volatility. And then you can see then the last half an hour, 45 minutes of the day sold off strongly. Next. Chart number 15, here's the triple Qs. Again, they actually briefly took out their February highs today. They still look decent besides the reversal today, but big reversal there. The 9 EMA, that's your first support. The fact that we're still well over the 9 EMA, again, it's still very strong. So that's your first support. Next. Chart number 16, here's the KISS trend system. Unlike the S&P, the KISS trend system went back long on the triple Qs last week, right there. Still has its current stop here. Today, when the Qs were up, it did have a second STS higher low stop, but the fact that we pulled off the highs, that was then lost. Okay, but otherwise, this system is still long with the stop now at this higher low. Next, chapter 17. Here's the 4 time frames. One thing to point out, we had some A's show up here, and if you're new to Breakpoint trades or the YouTube video, these A's, that represents amateur. We call that amateur hour. So when they form in an uptrend, it's amateur buying. Typically what it is a lot of low share count order size, like 100, 200, 300 shares, stuff like that. Small retail investors essentially chasing a rally. And that's what happened. You had retail investors chasing a rally there, and they got trapped, and then you got that big reversal. The same works on the downside. I don't have any A's here, but whenever you get A's in the downside, they typically mark bottoms. It's typically retail investors selling or shorting a sell-off at the lows, getting trapped. But that marked a little high today. You can see we had the A on the 130 minute, perfectly marked that. And we had an A on the 78 minute and a DeMark 9. Next. Chart 18, here's the 2-hour review. Again, we had this really nice channel last week. It looked like price is going to break out of it, and it did. Broke out of here. Was going to steep channel, had some divergence forming, and that finally broke today. Now we're looking for a possible higher low, as long as price stays over this downtrend line. Next. Chart 19, here's the NASDAQ summation index with the 2 and 5 exponential moving averages. Kind of a sort of like a quasi system, buy and sell system on the NASDAQ. And again, it's not perfect, but it overall follows trend pretty well, as you can see. But one thing that's been very glaring here is after this sell signal here in February, and you can see the NASDAQ basically rallied and it took out that February high intraday. This hasn't even budged. It hasn't even participated at all in the rally. Again, what that's showing is you're having just a few major stocks leading the indexes like the NASDAQ. Again, Microsoft and Apple are now over 13% of the S&P, and I didn't check what it is in the Qs, but I know in 2021 you had 4 stocks at about 20% of the Qs. So that's what it's showing, is there's a lot of individual stocks languishing while it's just a few of the majors causing the index gains. That's not good longer term and sustainable, but that's what's going on at the moment. Next, chart 20, here's the IWM small caps. Again, they got oversold here early in the week, rallied up to their 9 EMA. As you know, they broke this uptrend line a couple weeks ago. That was bearish, but stalled at the 9 EMA. That was a reversion to mean bounce and a big move down today. You have a shelf support here. If this is lost, this could get quite ugly. Notice, but as I always state, draw trend lines on the 14 RSI. You can get very nice signals by doing this. These trend line breaks gave awesome sell signals and buy signals on the Russell 2000 over the last 8 months, and you got a clean downtrend line here to monitor. And of course, price stalled at that so far. Next. Chart 21, here's the 60-minute IWM. You had sort of a coil pattern here, but notice that the rallies all stalled at symmetry. Okay, so this was your symmetry bounce here. All these rallies essentially could not break symmetry. You needed to break symmetry to have a bullish break, and we did not. Now, guys, let's move it on and let's look at some longer term charts, even though it's an intra-week newsletter. Normally, I don't look at these until a weekend newsletter, but let's look at them now. So, chart 22, here's a monthly chart of the S&P 500 going back to, say, 2007. Okay. As I stated, Steve and I have never wavered in our analysis that we're still in a bear market. Steve and I called for a bear market in late 2021, and we confirmed it in January 2022. Okay. Again, this is a classic bull market move. So you had the bear market or bear market bottom in March 2009. You could see the bull market progression, but you can see what happened. And I've talked about this many times before. There's your typical slope of that bull market, and just look at the intensity that slope increased, right? Classic blow off move of a bull market, right? So just classic there. And then 2022 was a vicious bear market. And let me clear those out. So, but just want to point out to you, you could see the S&P has been finding support at or resistance at the 20-month moving average, which is typical in a bear market. And notice your moving average ribbon, it's been pinching on the underside. So these demand zones are longer term supports. You also have maybe an uptrend line you could draw from the 2009 lows here. Ultimately, these are some of my longer term targets down in here. Again, not saying we go there now, but eventually during the bear market that we're in. Next. Chart 23, here's another monthly chart. This goes back to the early 90s. And this really illustrates that 20-month moving average. You can see typically in bull markets you stay above it, in bear markets you're below it. All right. And, we've been below it since last year. Also, the 14 stochastic on a monthly chart, bear markets, it goes below the 50% area. Okay. In bull markets, it finds support at the 50% area. And it's been that way. Here's a parallel channel line. I do believe that channel line will be tested over time, if not one of these fibs below. Next. Chart 24, here's another chart. This is a quarterly view, so each candlestick is a quarter. And again, this also really illustrates the market, that classic blow-off move we've had in 2020 to late 2021. You can see this, the parabolic move there it had, and come down to this 20 quarter EMA. Here's an uptrend line off the 2009 lows. And here's the thing, guys, just look at this chart. Oh, by the way, here's another thing. The MACD on a quarterly view, while not perfect, general crosses of the MACD typically produce longer term trends. You can see in there in 2020, MACD basically found support, but the MACD is bearish now. So we're in a bear market cycle. But just looking at the chart, does it look like, I gave two options here. Does it look like the S&P wants to just go back to new highs like that? No. To me, it looks like at minimum, you get some sort of lower high, like I show here in red. And that would be the best case. I hope that's all we get is the S&P going down to the low 3,000s or the 2,000s, something like that. But given the backdrop, fundamental backdrop, the sheer amount of debt and other things, I really don't, in the hole the Fed has dug itself and all these other central banks, I don't know how all this plays out. But all right, guys, let's go ahead and move on. Look at some indicators. Chart 25, here's the VIX. So the VIX, as you know, was outside its upper Bollinger Bands a couple weeks ago. That ended up being a buy signal. That's one of the signals of the VIX Bollinger Band system. And today was down, and then, of course, formed a big hammer inside here. Next. Chart 26, here's the comparison of the VIX and the VVIX. Not really seeing anything stand out here at the moment. Next. Chart 27, here's a 60-minute view of the VIX. Notice you have a symmetry move here, and that's essentially where the VIX found support today. Next. Chart 28, just following up on some of these other indicators, here's the S&P and the S&P equal weighted ratio. And this really illustrates the point of, look at that equal weighted. Again, that takes all the stocks in the S&P and weights them equally. And you can see basically the average stock has been just sharply declining. So again, it's just a few stocks been leading the indexes. Next. Chart 29, here's the put call ratio, CPC. So currently it's only at 1.03. So if the market did want to have more sell-off, get some fear in, it's definitely got a lot of room. The last time when it was outside its upper Bollinger Bands, that ended up being a low point here. of the market, nice buy signal, as these other times when it's outside the bands, but it's far from doing that, obviously. Next, let's move on to bonds. Jarbor 30 TLT 20-year bonds. TLT formed a perfect symmetry down here in early March, which we talked about, roughly 10-point pullback here in December and February. Rallied up to the horizontal resistance, pulled back. But we talked about watch for this to find support in the moving averages, which it has. You can see the volume profile still looks bullish. And it's possible this could try to rally again and break out. Next. Chapter 31, here's the yield curve. So the yield curve has been negative for quite a while, since mid-2022, as you know, signaling a recession that is coming. Notice that it's starting to spike up quite a bit. Again, it's still inverted here. But remember, guys, in the past, if you read your history, the market recessions and slowdowns usually don't start when you have your inversion. They start after the yield curve is inverted and then comes back to a normal state, not inverted. So the fact that this is starting to spike is definitely something to point out, and especially if it were to go back up and lose the inversion, that would pretty much be, big confirmation of what we know is coming. Next. Chapter 32, here's high yield corporate. Now this is holding up a little better so far. That's one positive. You can see well off the highs today, tagged as 50-day moving average, but it is holding up a little better in the S&P here. Next. Chapter 33, here's the comparison of the S&P to the high yield corporate bonds. Again, what I like to look for is divergences. The two tend to move together. So for example, back here, high yield corporate made a higher low, S&P made a lower low. That was late February, and then of course then we got a little decent rally there. Right now you can see S&P sold off sharply. High yield corporate still has a higher, is stronger here, so there's a little positive divergence there. So we'll see how that looks tomorrow and this week, but definitely something to watch. Next, let's move on to some of the market sectors. Chart 34, here's XLK Technology. You can see rallied up today, got near that trend line we had drawn before, pulled sharply back. Next, chart 35, transports, as you know, broke these support areas we talked about, broke this support, rallied, back tested as resistance. Been finding resistance at the 200-day moving average recently, and it looks weak here, kind of like a bear flag. Next, chart 36, the bank index. Again, you all know what's been going on there. This had a waterfall sell-off, and again, it got very oversold here, very stretched away from its short-term moving averages like the 9 EMA, some RSI divergence. We got a bounce, didn't quite make it to the 9 EMA, big reversal today, so to the downside. Next, chart 37, XLF, same deal, got very oversold here. It was below its lower Bollinger Bands for a number of days, moving average ribbon super wide, RSI divergence. We got a rally back to the 9 EMA, but that was resistance and pulling back. Next, chart 38, regional banking, same deal. This one looks uglier. Again, this was that a fourth wave and we're going to move down to a new low again? We'll see. But basically, these areas had reversion to mean bounces, basically back to their 9 EMA or a little below, and logical sell-off. Clearly, the comments today from Yellen did not help this. Next, moving on to commodities, chart 39, DBC. DBC broke that support, shelf support, week and a half ago. It's been rallying back a little bit. Remember, this broken support shelf is now resistance. Next, chart 40, crude oil. We were monitoring this 3.5 month-long coil, which broke down, got oversold, prices rallying back a bit. Next, chart 40, here's the OVX. This is the volatility of crude oil. Think of it like the VIX of crude oil. You get, again, while not perfect, you get buy signal. I have the rules on the chart. So whenever it's outside the upper Bollinger Bands and closes back inside, that gives you a buy signal. And when it's below the lower Bollinger Bands and closes back inside, you get a sell signal. And you can see we got a perfect sell signal there in early March. was a great sell signal. And we got a buy signal on Monday when it closed back below its Bollinger Bands. And you can see it's given a trade. Now, so far the trade finding resistance at this previous breakdown area. But it did give a trade, guys. And again, that's a benefit of being a subscriber of Breakpoint Trades. We give you the live URLs to these charts so you can actually look at them on your own instead of just seeing static images like this. Next, chart 42, natural gas. Stalled at that trend line I drew. Got your support below. You still have this potential MACD kiss stochastic setup here, but we'll see. Next, chart 43, copper. Copper's rallied off this support channel so far. It's done well. Next, chart 44, DBA, still weak here. Still been selling off. Next, chart 45, Bitcoin, reversing up here. Not surprising. Next, chart 46, Mara. Was a nice trade out of this wedge, but you could see stalled logically at its 200-day moving average. Now the buying patterns are still decent here, but we'll see. Have some sort of stop in place like I show here. Next, chart 47, US dollar, UUP ETF. Nice sell-off here this week. Next, moving into precious metals, gold, chart 48, gold. Again, gold had that shooting star black candle on Monday. That marked a little short-term top. Pulled back, but it's still above its 9 EMA here. Next, chart 49, GLD, the ETF. This looks a little better than gold itself. Kind of still has a flag look to it here. Again, gold has really benefited in this uncertainty environment. Next, chart 50, here's the gold KISS system. As you know, this went long a couple weeks ago right there, and it's had 3 higher low stops. Current stop is at 176.40. Now, I will say short term, got a DeMark 9. Moving average ribbon's getting a bit wide here, so just be aware of that. When the moving average ribbons get wide, sometimes you get your reversion to mean pullbacks. When they're pinched is when you have your energy pent up. Next, chart 51, here's another daily chart of gold. This has the silver gold ratio, which has been actually leading. Next, chart 52, silver itself. That wedge played out beautifully, as you can see. Nice rally from that wedge. Next, chart 53, GDX. GDX found support in early March and February at that 61.8 fib. And so far, these are your higher lows. You could also just simply trail a stop up below the 9 EMA. Again, price was off the high today, but short term, the stocks have been leading here via the GDX-GLD ratio. Next, chart 54, here's the 60-minute chart. Now, the 60-minute chart looks a little vulnerable to me, guys. GDX did rally today, but you have a lower high here, and it looks suspiciously like kind of maybe a wave B to me, and it could perhaps use a move down. Watch the ratio here. It's still holding, but this could easily move. You also have the MACD. Notice the MACD is lagging. So, next, let's look at some individual names. So, on Monday, these are the stocks that I liked as long ideas. And even, last week, OR was one I pointed out last week. Was a big breakout. I pointed out how this one was outperforming, and it gave a great trade. Next, chart 56, Dundee Precious Metals, another one. Had a kind of a cup and handle look. I pointed this out last week, played out. Next, chart 57, MAG Silver was another one I liked. It was coming off the lows, off a divergent low. You got a symmetry break, and it's been working higher. Next, chart 58, GFI. One I said to watch. It's had a nice move here. I would not chase this, guys. It needs a pullback. It's quite overbought. Next, chart 59, DRD was another one I mentioned on Monday. I said watch a pullback. And you got a pullback yesterday if anyone bought it. Off the highs today, but you can see overall it was looking pretty decent. Next, Jabber 60 AGI, another one I said to monitor. They pulled back on Tuesday, and this still has a nice little cup and handle look to it. All right, following up on other stocks. Again, I'm going to keep it very brief here. So Jabber 61 AMD. AMD has been a very strong stock. Another little shooting star, not exactly shooting star, but an inverted doji today. Ribbons quite wide here. You could perhaps use this as a short, but remember this is a strong stock, so but it is a bit toppy looking there. Next, Jabber 62 COUR. This was a short idea of mine on Monday. So Monday it broke down. I said a target area is probably down here at that September lows. On Tuesday it bounced to retest that broken trend line, found resistance, and down today. Next, Jabber 63 IP Potash. This short play has been playing out nicely over the last couple weeks. Next, Jabber 64 BABA was one we've been monitoring, and it broke its trend line yesterday. Was up today initially. Lost those gains though with the market. MACD has crossed to the upside. Next, Jabber 65 AI was one I mentioned on Monday. I said to watch for a trade over this trend line. You know, the AI area has been super hyped. So it did give you a trade if anyone followed that. Next, Jabber 66 Lemonade. This support area. It did bounce off support, but this is also a short if it loses this support. All right, guys, that'll do it. We'll see what happens tomorrow and tonight. Futures, ES futures are up about 6 points. Again, that's pretty much noise these days, so we'll see how they fare tomorrow. We are oversold here short term. And again, the markets sometimes have an opposite reaction after the FOMC, so we'll see what happens tomorrow. But again, regardless if the market does recover, long term, we still think we're in a bear market per my longer term charts. And systems have done well here. If you're not a subscriber to Breakpoint Trades, sign up, start receiving our 5 newsletters per week and our signals to our trading systems. Have a great evening. Take care.